In this video, I'm going to journalize transactions under the periodic inventory system. Okay, so this is one of our inventory systems. And in merchandising businesses, sometimes you're the buyer and sometimes you're the seller. You cannot be the buyer all the time because you will just be buying, or cannot be the seller all the time because you will just be selling. Okay, that's not logical, no? Of course, it's buy and sell. And before I jump to the transactions that I will journalize, let me first give you the pro forma, meaning the format of the entries given different scenarios. Okay, so for the first, let's say you are the buyer and then you made a purchase. This is your entry. You will debit a new account title called purchases. This is a nominal account. Its normal balance is debit, meaning if you want to increase purchases, you will debit the account. And then for the credit, you have cash or accounts payable. Cash if cash basis, accounts payable if on account, diba? That's for the purchase. What if you are a seller, and you made a sale? You will debit cash or accounts receivable depending on the problem, and you will credit a new account title called sales. This is a nominal account as well, and its normal balance is credit, meaning if you want to increase sales, you will credit it. Okay, how about in case of returns, allowances, or there are memos given by the seller to the buyer or buyer to the seller? This will be the entry. Actually, it's just the reverse of the initial entry because you just returned what you purchased. But instead of using purchases or sales, you will be using a new account title. For the buyer, you will be using purchase, returns, and allowances. And for the seller, you will use sales, returns, and allowances. Both are nominal accounts, but the normal balance of purchase, returns, allowances is credit, while the normal balance of sales, returns, and allowances is debit. So that's for the returns, allowances, and issuance of debit or credit memos. Okay, next, how about the freight? Freight here is transportation. If you are the buyer and you paid for the transpo, this is your entry. You will debit an account title, freight in. This is a nominal account. Normal balance is debit. And you will credit cash or accounts payable depending on the problem. And then for the seller's point of view, if you're the seller and you paid the transpo, debit freight out. This is also delivery expense, by the way. This new account title is a nominal account, normal balance is debit, and for the credits, the same with earlier. Okay, so cash if cash basis and accounts payable on account. Okay. Let's say you are the buyer and you pay within the discount period. You made a prompt payment. That entitles you to the cash discount. So if you can still recall traded cash discount, this is a cash discount. For the entry, let's analyze. You will debit accounts payable to remove the obligation and credit cash to represent the payment. And since you availed of the discount as a buyer, you will be paying less. So let's try to assume some figures here. Let's say your obligation is 100 and you paid 98. So the discount in this case is 2. And this will explain why purchase discount is credited in the format. Okay? And purchase discount here is a nominal account with the normal balance of credit, meaning if you want to increase it, you will credit it. Now let's jump to the seller side. If you are the seller and your buyer availed of the discount, you will be collecting less. So let's again assume some figures. Let's say your receivable is 100 and you only collected 98, meaning the discount is 2. And this will explain why sales discount is debited in the format. And sales discount, this is a nominal account with the normal balance of debit. So meaning if you want to increase it, you will debit it. And then for payment or collection beyond the discount period, I believe this is self-explanatory because this does not involve the new account titles. All the account titles encircled in white are the new account titles except for freight out, because freight out is just your delivery expense. Now let's journalize. January 1, purchase merchandise on account 100,000. Terms 10%, 10%, 2, 10, and 30. Okay. So to journalize, let me first write the date, January 1. So 1/1. Debit purchases, you are the buyer. Purchases. Credit, since you have the terms, obviously this is on account. So credit, accounts payable. Okay, and then for the amount, it's not 100,000 because you have to deduct the trade discount first. So to compute, that's 100,000 times 90% times 90%. Let me just compute it here. Times 0.9 times. Okay, so the answer is 81,000. Okay, note that the trade discount is automatically deducted. Although this is for bulk purchases, whenever it is given in transactions, you automatically deduct it, no? Because you are assuming that the buyer availed of the bulk discount. And then for the terms of cash discount, it will follow later. Right now, just leave it there because we cannot still determine if the buyer will pay within the discount period. So it has to wait. So that's the initial entry. January 2, paid freight on merchandise purchase. So you are the buyer. And if you are the buyer and you are paying the transportation, you will debit freight in. Freight in. And then it says here that you paid. So meaning this is not on account. You paid cash, so credit cash. The amount is 5,000. Okay. Then for January 3, return defective goods. For returns, you will just reverse the initial entry, but this time you will use purchase, returns, and allowances. So debit, accounts payable, credit, purchase, returns, and allowances. And that is 10,000. Okay. On January 11, paid account in full. Okay, so question, were you able to pay within the discount period? The terms is 2, 10, and 30. So to compute the number of days, January 11 minus January 1. So that's 10 days. And this is within the discount period. So the buyer availed of the cash discount. To record, you will debit accounts payable to remove the obligation. You are left with, so you started with 81 minus 10. So you are left with 71. You settled everything, so that's 71,000. And then you will credit cash and also credit purchase discount. And obviously, the cash here is lower than 71,000 because you paid within the discount period, so you would be paying less. Now, let's compute the purchase discount. Purchase discount is computed by getting the purchases, 81,000, minus the returns. Okay, January 3, you have returns, 10,000. Let me write the solution. So, that's 81,000. This is the purchase price minus the returns, 10,000. So, that's 71,000 times the applicable rate, that's 2%. Okay, 2%, this one, 2%. To get, 1,420. So meaning, if this is the discount, you will only pay 69,580. Okay, so this is your entry. What if instead of January 11, you paid on January 12? So what's your entry? So in that case, so this is a different scenario. January 12. So of course, you will just remove the obligation. You have an obligation of 71,000 and you will credit just the cash because there is no discount. Okay, let's proceed. February 1, sold merchandise on account. So this time you are the seller. The selling price is 20,000 with the cost of 10,000. The cost is the selling price without the markup. Then you have the terms 5%, 5%, 1, 10, and 30. So to journalize, 2-1 debit on account. So debit accounts receivable and then credit sales. And for the amount, Of course, you will not be using 20,000. You need to apply the trade discount. So 20,000 times 0.95 times 0.95. So let me just compute. The answer is 18,050. Okay, and then for the cash discount here, it has to wait. Next, February 2, paid freight on merchandise sold. So you are the seller and then you paid the transpo. So you would be debiting freight out. Then it says that you paid, so credit cash amount is 500. February 3, received defective merchandise sold on account. So you will just reverse the initial entry, but this time you will use sales, returns, and allowances. So debit sales, returns, and allowances, and credit accounts receivable. How much? 1,000. And by the way, I am not using the amount of cost here because in the periodic system, you don't make use of the cost of sales account. No? Cost of sales in the periodic inventory system is computed using a formula. Okay? So February 4, partial payment. So meaning you receive part of your collectibles. So debit cash, credit accounts receivable. That is 2,000. And the next, okay, collected in full, February 11. So this is 11 minus 1, 10 days. So this is within the discount period. So the buyer availed of the purchase discount. So let's journalize. 211 debit cash for the collection. You would also be debiting sales discount here because you would be receiving less than your collectible. And then credit accounts receivable. Now, how much is your AR? So February 1, you have 18,050 minus 1,000 on February 3 and minus 2,000 on February 4. So you are left with 15,050. And to compute the sales discount, first you will need the sales price of 18,050 minus the returns and allowances. That's 1,000. And this will be the basis. You do not deduct the partial collection because it will not make sense. This is the common error of students. They deduct the partial collection. So you stop after deducting the returns and then use that amount as the basis. So multiply this by the applicable rate, 1%, this one, to get the answer. The answer here is 170.5. Okay, so 170.5. This is placed here. And since the customer availed, you will be collecting less. So instead of 15,050, you will only be collecting 14,879.5. Okay, so that's the answer. What if you pay beyond the discount period? So 12 minus 1, that's 11, that's beyond. So no cash discount. So on February 12, debit cash and credit AR. How much is your AR again? 15,050. Since no discount was availed, the seller would be collecting everything, 15,050. And that's for the journalizing under the periodic inventory system. Thank you.